Hey everyone, welcome back to the ScholarAI Founders Pod. Reminder to catch us on all the typical podcast locations and find us on our YouTube channel. Today we're going to be talking Nvidia earnings, Bitcoin still on the rise, and some other tech and business news. So Shashi, beginning with you and beginning with Nvidia, I'd like to get kind of your overall take on the earnings with specific respect to how we deem the public response to these better than average earnings. And setting the stage slightly here, I'm perceiving it to be that the new meets expectations for Nvidia is that they are blowing out the analyst stated expectations, and that their market, that their revenue, that their profits, etc., continues to rise at paces that analysts seem to be underpredicting. And then when they hit analyst predictions, that seems to be deemed by the public, at least in response to stock prices, as a poor performance. And so I'm going to share some screens here while you're describing this, but I'm very interested to hear kind of your take on what we've got.
Yeah, so when a company says they beat or they miss, what that means is they either beat the expectations that the company has set, meaning guidance, that's generally called guidance, or they beat or miss the expectations set by analysts. And this specific point you're making is about analyst expectations. And as you correctly said, Nvidia has continually beat the consensus analysts' expectations. The next question is how much of that is already priced into the market. So if you see the stock not move up considerably after an earnings report in which they beat, that's because even though the analysts expected a certain level that they have surpassed, the pricing of the stock has already baked in that amount of beat. And so what you're seeing is a small downtick here. At the beginning of this year, Nvidia seemed like a hot stock that lots of people had questions about. Is this going to continue to rise or fall? So if you click on year to date, what this tells you is that had you invested in Nvidia at the beginning of this year, after it had already been deemed a really hot stock that was maybe overinflated, you still would have made a 200% gain on your stock, on your equity purchase. So Nvidia has had a lot of room to run, even when it was a surprising third largest market cap company in the world, then second largest market cap company in the world. This next chart shows you the largest market cap companies in the world, and it shows you that Nvidia is now the largest company in the world by market cap. It has surpassed Apple and Microsoft and Amazon and is now the most valuable company. How much more room does it have to run? So what are the interesting questions? How much more room does Nvidia have to run? And what's priced in and what's not priced in terms of this current equity price? What you're seeing now is that some people are taking some profit off the table. So some traders, some retail investors are taking some cash off the table. They've made some profit on this Nvidia purchase, and their thesis is just as much downside as upside, perhaps more downside than upside. I'm therefore going to cash in at this point on the Nvidia stock. What Nvidia does is they produce the GPUs that retail consumers use for graphics, and that more recently AI systems use for heavy processing work. One of the things that has created a headwind is that the Blackwell processor that they have created has had some delays. So it's going to take a little longer for the more complex, newest processor, the Blackwell chip, to be released. This is a 3,000-pound massive entity with a backbone and multiple layers of processing. Okay, so in terms of the stock price, yes, it's continued to run. I'll share my personal opinion at this point. There is no end to data center demand. This is the brain inside the data center. There will continue to be demand for NVIDIA chips. I would expect them to continue to do well, not at the torrid pace that they've been on for the last couple of years, but I still would think if you bought NVIDIA today, you're going to make a nice profit on that stock on a pari passu kind of even basis with buying Apple at this stage or buying Microsoft at this stage or any of the other top tech names. I don't think it's a worse purchase even at this price than the other major tech companies.
Excellent. Lakshay, any response to the kind of stock news of NVIDIA? And then I want to ask a follow-up question to you specifically related to CUDA and potentially their kind of defensive moat related to that kind of platform as well.
Yeah, I do think since the pandemic, we've seen a very significant rise in how many retail investors there are. I guess just like it's much more common that the typical person you walk by on the street has a hobby level of engagement with stocks. I think what that also means is that like it's very, very much more likely that folks are investing in stocks that have known names, that have like known hype behind them. And Nvidia is one of those. I kind of agree with Josh, and that's earned because again, the demand and supply, like if anything, the demand that does exist, their supply is currently not meeting, but they are clearly the best position to suit said demand and serve that supply. They just need to keep on growing the way they are. And I think in that way, the price is justified insofar that I think it will continue to go up over time. I kind of reached the same conclusion that Shashi does. I think what we're seeing, just like these dips and whatever, is just, again, with a retail investor, the likelihood of cashing out or like wanting to cash out or make like a more short-term return is just higher. So when you hit this peak, when you hit, oh wait, this stock I invested in a year ago is suddenly the most highly valued company in the world, feels like a natural break point. They just did an earnings call, feels like a natural break point that then justifies selling a little bit. But I don't think that's an indicator necessarily of market demand, supply, and how valuable the company is necessarily. We're just seeing more retail investors in general.
I think that's well stated. So I want to follow up with you specifically, Lakshay, just because you have your hands on this stuff, building the most out of anybody here. And CUDA to me feels like a very defensible moat. It feels like something that has become the industry standard. It feels like everyone is building on CUDA. So if you will, just for those that might be listening for the first time, we've talked about CUDA before. We'll just give a brief primer for what that is and then kind of what advantage that gives to Nvidia kind of overall.
Yeah, so CUDA is a software package that interacts very specifically with NVIDIA GPUs for running ML systems, monitoring them, like making sure they're healthy and running correctly. The reason it's such a significant moat is if you're going ahead and doing a PhD, which is generally the kind of like barricade to doing any sort of ML in industry cases, you're using CUDA to like run your systems, to optimize them, to make sure that they're running correctly. And what that kind of means is that because it already has a foothold with like research, which is where all of this stuff is sort of starting, the folks who are experts with GPUs, the folks who are like really highly engaged with GPUs, preferentially want NVIDIA systems wherever they go, right? You're not going to go to a place and all of a sudden be told like, yeah, we don't use CUDA here. We use this like kind of like off the shelf random thing that you haven't heard of before. That's almost like a barrier to that person leveraging their expertise. And so in that way, NVIDIA and CUDA are kind of brought from the world of academia into the enterprise world just by nature of hiring talent, right? It's kind of part of the package of having a really talented ML engineer, a really talented like researcher doing your work. And so in that way, I'm sure there's plenty of other, software is replicable. Software is very, very replicable in general. And I'm sure there's so many projects that I've tried, like what is an open source CUDA. The matter of fact is, in the same way that there might be like company loyalty, there's also software loyalty, right? People have their preferred cloud providers. People have their preferred software open source tools for things. And if you have enough mass of who those users are, they will bring those tools into your enterprises, into your corporation. And by default, NVIDIA has a foothold in what is the world of machine learning, just by virtue of having a foothold in the academic world to start with.
Yeah, I want to add another layer to this, and then Josh, I want to kick this back over to you, is that the previously, before kind of this boom of AI, when ChatGPT kind of exploded into the public consciousness, and then all of a sudden these, model inference became mainstream. One of the primary use cases for these GPUs was crypto, specifically mining cryptocurrencies, trying to unlock these undiscovered or previously unmined Bitcoins, Ethereums, other coins, other tokens on these various blockchains. I'm wondering if, given the recent run that crypto has been on, if we also think this is foreshadowing for expanded use case, again, leading to kind of accelerating NVIDIA's revenue and profits.
Yeah, so let's bring up a similar chart here, Damon, of the price of Bitcoin. So Bitcoin at the time of recording is about 97,000 per Bitcoin. If you bought Bitcoin at the beginning of this year, you'd be up about 120%. It was about 44,000 at the beginning of this year. Okay, so the way that Bitcoin works is that Bitcoin miners they solve a mathematical problem. They solve an algorithm and find a sequence of bits in a long sequence of random numbers in order to quote unquote solve or or mine the Bitcoin and thereby attach the new block at the end of the chain. So this process of Bitcoin mining is very expensive in both compute and energy. So what you see Bitcoin miners do typically is try to find low-cost sources of energy and lots of compute. And this was one of their use cases, as Damon correctly mentioned, of GPUs. They're well suited to solve this kind of Bitcoin mining problem. In terms of Bitcoin's price, there are lots of people who predict 100K Bitcoin this year. I wouldn't be surprised if that happened. I also wouldn't be surprised if Bitcoin in 5 years was $20,000 or something less. And that's because I think Bitcoin has some structural problems. If we took the smartest people in crypto and we put them together and said, okay, let's design a store of value and make it operate via blockchain, you wouldn't design something that would over time degrade. And by that, what I mean is it gets more and more expensive to mine additional Bitcoin over time. And that's a required step in order for Bitcoin to continue to attach transactional nodes to the end of this chain. And so the decentralized aspect of Bitcoin is what has attracted people. Initially, that was used for illicit activities, drug sales, etc. It was a money laundering vehicle in some ways. It's had its moments where it's been more useful. There are lots of stories where people spent Bitcoin to buy pizza or beer or whatever. But I would expect that ultimately the drawbacks of Bitcoin will cause it will cause it to fail in the long term. I don't think it will be a sustainable source of store value. It's certainly I think widely known and understood to be a poor medium of exchange. So you don't want to try to do a lot of exchange transaction work. You wouldn't replace Visa or MasterCard with Bitcoin because the cost of a unit of exchange is just way too high to make a single transaction on the blockchain. But as a store of value in the short term, I understand why some people would use it, and they would use it as an improvement over their domestic currency. If you lived in a country where you didn't trust your local currency and you had an alternative to have your store of wealth, your bank balance held in Bitcoin rather than maybe a local currency that you didn't trust, I could absolutely understand why you would want to store your value in Bitcoin. However, Bitcoin has lots of risks. Two of those risks are you lose your private key. This is a non-trivial problem. Lots of people have lost their private keys, accidentally thrown away their cold store wallet or their ledger, and you lose the entirety of your Bitcoin balance, which for some people has been billions of dollars. So losing your private key is a key problem for Bitcoin. The second problem with Bitcoin is that if you live in a country where you really need an alternate store of value, you have a dudes with guns problem. So if you lived in a country where, let's say the national government said Bitcoin is illegal and you still want to hold your money in Bitcoin, if guys show up at your house and say, give me your Bitcoin balance, transfer it here or else, you lose your wife or you lose your kid or I shoot you in the face. This isn't going to be a secure, quote unquote, store of value. There is no store of value that is secure from a national government or dudes with guns. And if you are fundamentally in a position where if you don't trust your local currency, odds are you're probably more likely to be in a place where dudes with guns can take your crypto wallet.
I want to throw something back just in kind of response to what you're saying, in large part juxtaposing the chart we just showed, which was the year-to-date price of Bitcoin with the year-to-date price of Ethereum, or Ether, which runs on the Ethereum blockchain, because a lot of what you were talking about, this proof of work versus proof of stake, blockchain architecture is counter in Ethereum when comparing it to Bitcoin. And so I'm wondering, I guess, number one, how do you respond if it's not Bitcoin, then what is it? Do you feel like it's Ether on Ethereum, or do you feel like it's maybe some other rival token on a different blockchain? And then also respond, if you will, to, as we've seen this dramatic increase in Bitcoin, other coins don't necessarily seem to be as highly correlative with Bitcoin as we've seen in previous run. So there does seem to be some asymmetry in Bitcoin's rapid rise, where other usually fast follow-on coins seem to be lagging behind.
I would be really interested in seeing what would happen if the US government created a store of value based on a government-backed tether, if you would, to the US dollar. I think that is a much more likely store of value. Why does the US dollar work as a store of value? It's because the US government has a military and it has a currency system that people trust. It has trust. And that's why people are more likely to buy US treasuries as the quote unquote risk-free asset than to buy another currency, another nation's currency. And so I think what is the most likely winner of this? I mean, it would be really interesting to see what would happen. I don't know enough about crypto to say, but if you're asking me for conjecture, then I think it would be really interesting to see what would happen if the US Treasury said, we're going to create a coin for citizens to pay their taxes, or something very basic, just sort of a very basic like connection between government and citizen. And thereby kind of giving birth to the very beginning stages of a reliable, trustworthy crypto that's backed by a country. I don't think crypto that is unbacked by a country will be reliable enough. I don't think the decentralization is a net positive. I think it ends up becoming a net negative.
Interesting. I think I want to pull on that thread in a follow-up episode, because I think the tangent of decentralized versus centralized kind of goes to the core of what cryptocurrency is supposed to be. Lekshay, I want to get your thoughts on kind of the rise of Bitcoin, maybe an alternative currency. I know you're not immersed in this world, but kind of by virtue of this podcast are being forced into these conversations.
Yeah, no, I was worried when you were going to turn to me. I was like, what the hell am I going to say? Like, we're talking about like macroeconomics and governments and crypto. I'm like, I sometimes lose money, and that's my contribution. That's all. I don't know. Yeah, I honestly, like, as uninteresting as it is, I don't really have that much to add. I think, like, I just look at Bitcoin the same way as like retail hype investors drive up price a lot. We're in a phase where people are really, really hyped about the market. That's all I got. Thank you. The next.
I think it's fascinating that's actually the tack that you took, because I do think that fundamentally at the crux of a lot of these arguments or these debates around cryptocurrency, we have these parties that I think both of you have represented in kind of your statements. We have someone who is thinking about this kind of from a first principles, like, if I were going to invest in this, how does it look from an alternative aspect? And we have a lot of recreational retail investors kind of YOLOing into these various coins, and both of which are driving prices up or down. And again, I say, oh, no judgment.
Who's just losing money and who's making money on the markets. It is very clearly not the guy wearing a green hoodie. Correctly, there it is.
Very good, very good. Okay, great. So let's kind of move on. We got a couple of other things I want to get to, just to get various thoughts on today. With specific respect, I want to go next to talking about this AI. And so what I've been finding in some of the buildings that I've been doing, and I want to get your feedback here, Lekshay, is that I am constantly surprised at how difficult it is becoming to wrangle these large language models into giving the outputs that people expect. And specifically, I want to get your download on what you think are kind of the necessary improvements for the use of these large language models in specific applications that go beyond the chat interface. Essentially, when the user or the front end that is receiving data that is supposed to be processed or passed back by these large language models, even if you explicitly tell the large language model to output in a specific JSON format, as an example, sometimes the information that you get back is just simply not what you expect. And that kind of in turn bricks the entire system that people are putting together. And so I know we've had several challenges with this, both in some of the applications that we've released and in some of the applications that we have been building internally. So I guess just if you would respond however you feel appropriate to kind of that thought. Large language models are difficult to wrangle. What do we think is next for helping deep folks wrangle those things?
Yeah, in the last couple of months, Y Combinator started a podcast called like the Litecoin podcast. I don't know if either of you watch it, but they had a really good episode from a guy who's working on a legal startup. And they had this really like nice philosophy. In general, there's this thing in software called like test-driven development, which is the idea of like write your test cases first. So if you are writing a bit of code that's supposed to like show a red circle, write the test to confirm that a red circle shows up first, then implement, right? And so a lot of the thesis of this guy's sort of thing that ended up being apparently very, very positive in the community, a lot of like star founders, whatever, really positively reacted to, is the idea of like start by generating or like creating your like 1,000, 2,000 like prompt library. Like start by knowing the set of actions you want to have solved, write them out. You as a human write out, or whether it's data you collected, whatever it may be, write out, here's the input and here's what my optimal output is, and then begin prompting. And what that hypothetically gets you to is that whereas most folks are just trying to like write a generic prompt, I mean, you kind of assume that for a simple task, like writing just something in human language, whatever would do the job. But the kind of simple matter of fact is that there's so many ways that some things can go wrong. For folks who've been using the product off late, we've been trying a lot of stuff. We introduced this thing called a multi-agent system, right? What that means is that we have an LLM talk to an LLM. So that way they kind of are responsible for different tasks and pass up the responsibility and the outputs that they have to a different thing that then gives you finally your answer that you're looking for, right? So if you've seen, sometimes there's startups that have done like multi-agent systems for Excel data, right? Where every single cell will have its own agentic call, right? The problem is that if you are writing so many LLM calls, there's so many different places where you can drop the ball of sorts. So for example, for folks who've been using our product, you might be familiar with features we have that are like interacting with your personal library, right? But to interact with your personal library, we need a very specific ID. And if one agent doesn't tell the other about the ID that's supposed to be using, all of a sudden you are guaranteed to miss, right? So it's just all that sort of little stuff that kind of accumulates a lot into your systems because they are 70, 80% decent. That also means that 20, 30% of the time they are exponentiating their problems, right? And it's not, I think in solving it, like we've seen O1 models do really, really well. For coding, I love O1. O1's really, really good. There are times where like Claude 3.5, I can't solve a problem with it. I throw O1, the problem, it solves it close to instantaneously, where it's being very thoughtful about its reasoning steps. But we haven't seen that reach a consumer use case because you have to assume latency on these reasoning models. You can't just trust it to generate in the same time. That kind of breaks consumer expectations a little bit. So I think the correct steps are kind of coming. Like the level of thinking of you don't write the prompting, let the system kind of like do its own sort of auto prompting, like let it reason is direction correct. We're just not seeing it arrive in consumer products because it simply takes so long to do. So I think if you solve the latency problem, but you take the general thesis of where OpenAI is going, I think you're more likely to arrive at something that's really, really useful. But that's hard to say. Again, O1 is still something that you have to prompt correctly to get the job done. And it's very possible that like we say 70, 80% now, maybe it comes 95% when O1 is fast. And maybe that's still not enough.
I think that's well said. And just to round out, I think, I believe the episode of Lightcomb you were referring to was in reference to Case Text, which was a legal AI software that was purchased by Thomas Reuters. So Shashi, I want to kind of throw it to you with a slight amendment to, as we know these problems with LLMs exist, we just recently saw the Y Combinator call for new startups. A lot of those calls were looking beyond AI. Do you kind of perceive that some of the public, especially the investor attention or people at large, are looking past AI? Do we think a lot of these problems are going to be solved by current incumbents or new startup companies that kind of already exist and are emerging? Or do you still see a large problem space for newly, unannounced AI startups to kind of come in and solve some of these problems?
As we saw last episode, we've reached the peak of inflated expectations for AI, and we're now progressing toward the trough of disillusionment. And that means investors are starting to turn their energy, and we know the VCs are sort of herd animals. As some move, so does the entire herd. We're seeing VCs move away from AI startups toward others, including crypto, blockchain, defense, etc. There are a variety of interests that Y Combinator has expressed, but pretty clearly a market shift from AI, and particularly SaaS kind of AI businesses that have, I think, in the main struggled to get enough traction and defensibility to feel like they are going to return the fund, which is the goal for any one of these VC investments to be able to achieve. So I think the zeitgeist is exactly as you say, that the energy and mindshare is starting to shift away from AI, particularly SaaS AI companies, and to other projects and problems that VCs can play a role in solving and that new companies can play a role in solving. Anduril has been very successful as a defense tech / AI company. And I think we're starting to see more companies take on this kind of hardware plus software, AI enabling a new hardware paradigm to be really interesting and provocative. So I would expect to see more companies like Anduril or inspired by Anduril in the defense sector, but also in industrials, in cleaning factories or doing dangerous jobs with new hardware plus AI software. So I would expect that AI will be a component of those companies. I don't think it will be the central feature that everything is sold on.
Yeah, I think that largely is correct. We've got a couple more things on the docket today, but I think they're going to be quite a departure. And I think in order to get to those, we'll leave those for later episodes and continue to pull on some of those threads. So thanks everybody for joining us for this episode of the ScholarAI Founders Pod. Reminder to catch us on the typical podcast locations and catch us next week on our YouTube channel, same time. Thanks everybody.